So the question here does what does the 10-year Treasury yield indicates after the NFP data? Here's my idea. So the bond market did love NFP data, and we've been we've been on a downside trying to price in jobs data, and with yesterday's price action, yesterday AGP brought a bit of anxiety in the market to say, are we going to get a very extremely bad NFP number? If we got an NFP number, chances that the bond market would be fully priced, almost priced for rate cuts. And why am I saying so? Remember that the bond market is basically the higher the interest rate, the higher the bond market prices will go higher, which means now you get better yield if you buy government bonds because it's higher interest. And in this case, if you to look at your inflation data, which is coming out slowly, it's at 2.4. So what's delaying us, as Powell said in the ECB meeting yesterday, what's purely delaying us in this case, it was tariffs. That's what he said. And I think one of those things, and I did explain about this on yesterday's video, that one of those things that he was looking at the jobs data, and the job market or the jobs data was very stable at 4.2% interest rate. Employment data, NFP numbers looked good. So today was a major one. If you got bad in NFP data, we will have seen the bond market coming lower. That's high indication of rate cuts. That the bond market is so adamant and is so confident that we will get cuts. And if jobs data was extremely bad, believe you me when I say Powell in the next meeting was going to cut rates. But now with this good jobs data, look at the bond market did love such a move. You look at the Nasdaq did love such a move, and again, if we go back to data, if you go back to data and look into where is this? Look into not even gonna look at economic growth. Look at NFP number. NFP number stable, good. Came out 4.17, which is a good number. Compared to even the forecast, it didn't even beat expectation. I was expecting a number close to 12,000 to 50,000. But anyway, ADP number was bad. And the good thing also, interest rate. Interest rate was 4.1%. Good jobs data as well. NFP, employment rate came out lower. That's a stability in the jobs data, and that does not rise power to cut rates. And the final thing that I'll speak about is jobs opening. You got a very good jobs opening number on the first as well. That was a good number. And wage growth. This is something which maybe wage growth was at 3.7%. I think it came down by 1.7%, 1.1%, 0.1%. So you can tell that these numbers are really saying something. Economic growth is not looking good. I should say GDP numbers. On an economic growth, I'm gonna show you GDP numbers and retail sales as my highest indicator here of of the the economic growth or economic activity. One of them is GDP minus 0.5. That's not good. And that why we saw that inflation is stable lower. And then also, retail sale has decreased to a negative, so there was no growth at all in retail sales. We got even less than what sales would be at negative 0.9%, which is extremely bad. That's indication of a slower inflation data. And as I've said before, CPI, we are at 2.4%. We are at 2.4%. So when you combine all this data, it says we are getting rate cuts. We're going to start seeing the bullishness. We see on the technical that the bond market it's starting to price in for rate cuts. However, NFP number saved the day, and it's high likely it's gonna delay. It's high likely that it's gonna delay the numbers. It's gonna delay rate cuts to maybe to the next two meetings. So if you were to look at the economic heat map for the US, You have unemployment rate. The focus was 4.3%. We got 4.1%, which is a surprise by 0.2%. Which growth? We got a very surprise. And these are the numbers that came out today. And then one of those things also is jobless claims was a surprise as well. We got a very strong number. Initially, such jobless claims was high. We beat expect. We got a lower. I mean, unemployment claims at 7K, which is very bullish. And another one, it's NFP. We got a surprise by 37,000. So if we're to look at this, the dollar has gained a bit of strength for today. We were close to neutral because we're towards. If you look at this heat map, we're towards the bullishness. We're towards the bearishness of the US dollar currency, given the high possibility of interest rate cuts. So yeah, man. So these are things that I look at and I determine my bias in terms of trading and in terms of long-term trading. So this was my NFP post NFP reaction, man.